Welcome to Pete's Investing. We were using a 15-minute price chart and reviewing weekly progress of some random sample of blue chip stocks from Australia, the US and Europe, namely Telefonica, Commonwealth Bank of Australia, BHP Australia, JPMorgan, Volkswagen, Johnson & Johnson and Caterpillar. We show opening and close positions, profitability and drawdown requirements on our theoretical backtesting. Firstly, we're not recommending to trade any of these positions or instruments, rather this is purely an educational guide to some trading ideas. And also very importantly, don't forget to subscribe and click on the notification button to receive any updates. And for same day updates, please review our Patreon channel, which provides daily updates should you wish to get those reviews. Also looking at some of our strategies in terms of money management, average down do's and don'ts, and simple trading strategy with using the CCI indicator and the average down technique. So let's get stuck straight into it. Let's look at our summary chart first. This looks at the stocks we're reviewing, the dividend yields estimated, and they're all taken from today's reading from Yahoo Finance, along with the ex-dividend dates and the profitability for each of those using the buy and sell strategy versus the buy and hold, and the maximum drawdown should you choose the buy and sell strategy. And this just extrapolates out number of weeks from when the chart is drawn, the starting date, and how that looks in terms of a monthly revenue based on these incomes or these revenue streams. So looking at Telefonica first. So again, you can see here it's advanced quite nicely in the last week, or the last couple of weeks, although I wouldn't call it earth-shatteringly beneficial, but it's still a positive. And in terms of our positions open, we open the positions back here for the buy and sell strategy, and that's still in an open position and it hasn't yet closed out yet. Next, we'll look at the Commonwealth Bank of Australia. This is consolidating a bit of a sideways market at the moment, but again, we're just drawing a trend line here. If it breaks below that, we might see some decline in the market for the CBA, or it may continue to consolidate. But it's doing quite nicely at the moment with an open position back here, end of January, and this has been consolidating sideways ever since. Next, we'll look at BHP Australia. Now, as you can see here, it's opened a position last week, although it's declined. So we're just drawing a couple of trend lines there, and it's consolidating into like what we call potential flags. So see how that goes. Should it break above that, it'll continue in a positive, and might consolidate in a few more days, or even break below that and start a bit of a downtrend. So I'll see how it goes, and we'll keep an eye on that one. Now look at JPMorgan. Bit of an uptrend here on JPMorgan as well, the last week. So again, you can see there the performance, 1692 versus 818 for the buy and hold strategy. And just to recap, the buy and sell strategy, which we're measuring here in this column, versus the buy and hold. That's just to re-emphasize, that's where we buy and sell based on our entry and exit strategy, and this is simply entering the market back here, and we hold on to it and see how it performs. So as the market moves in a downward or sideways motion and we accumulate trades, the buy and sell strategy outperforms the buy and hold strategy. But as the market continuously increases, as it does back here in the last few months, the buy and hold strategy will outperform the buy and sell strategy, only because it allows the profits to run. And again, emphasizing, most price charts, about 80% of price charts go in a sideways motion before making any advance. So buy and sell strategy generally outperforms the buy and hold strategy. Next, we'll look at Volkswagen. Nice upward trend here in the last few weeks. And as you can see here, we've entered the trade back here the start of March. Last couple of weeks it's advanced quite nicely. We've drawn that trend line there. Should a break below that, you might see a bit of a decline, but we still haven't closed out this position yet with a profit, so that's doing quite nicely in our favour at the moment. Johnson & Johnson. This is a bit of a decline, as you can see here. It's accumulating in this wedge. So I've drawn this trend line in the downtrend here and a longer term trend line here. So it probably will consolidate in this area here before it breaks above or below. Our positions for a buy sell is entered back here end of February, and that position is still open, although it's in a decline, but we'll keep an eye on that and see how it performs in this wedge. Lastly, for Caterpillar, this is doing quite strongly at the moment as well. As you can see here, this week's performed quite well, a bit of a sideways motion and it's advanced upwards, but it's been consolidating sideways in the last couple of weeks. Just looking at the trend line. So drawing from that level down there, we want to continue going into that trend line motion there. So in summary, over the roughly 17 months of trading for all these stocks, we've generated about $9,500. Now, bear in mind, there's a mix of US and Aussie dollars in there, and also some euros. So we're just trying to, if you want to call it a global currency, we're looking at 9,400, and that works out to about 568 per month over the 17-month average period. Okay, for an added explanation of our strategy, don't forget to refer to our supporting videos in terms of the average down do's and don'ts, simple trading strategies, and money management. If you want to get daily updates, go to the Patreon channel and we'll provide daily updates as necessary for each of those performances. So again, thank you for viewing this, and we'll see you in next